Hello everybody, we'll get started with the webinar at this time. This is Troy, I'll be presenting this evening. Before we get going, I just want to do a quick systems check to make sure the audio is up and running and you're seeing my screen all right. Just give me a quick okay in the chat box if all is as it should be. Okay, looks like we're up and running fine. Thank you everybody for the replies. The rest of you, no need. I've got enough responses to get the idea. Okay, so it's a good evening for fundamental news, that's for sure. The only better timing would have been maybe Friday evening to anticipate what was going to happen with the gap movements that occurred through the weekend. Boy, when we talk about two different types of fundamental news and one of the types being unpredictable, we'll talk about that in a second. That surely came to fruition here over the past few days. So we'll take a look at some interesting movements. We'll look at the fundamental news behind it and talk about what the plans might be that make sense to you moving forward with these assets. As we get going, keep in mind, as always, all investments have risk. It's no different with Forex trading, spread betting, options, trading CFDs. No one trade is guaranteed to be profitable. There certainly is a risk that you'll lose whatever it is you're risking with your risk management plan on any particular move. Certainly not everybody wins in the long term. With AvaTrade, it's actually, I think, better than the industry average maybe. Almost a third of all traders that trade with us, you can see the percentage there, profit long term, which means they're beating the spread, they're beating the overnight swaps, and they're actually able to consistently bring profits long term. And this is really what our business model builds itself on, is to have long-term traders that bring us spreads and those who hold trades longer, some overnight interest. This is the business model of AvaTrade. And so if we can see that number improve to 40%, 50%, even higher, making long-term profits, that's great, because AvaTrade's a hedging company. We don't bank on our traders losing. If 100% of our traders could profit, that'd be just fine with us as well. So the idea here is, as you're attending the webinars, from an educational perspective, keep in mind we're not here in the webinars to give financial advisement, but from an educational perspective, to be able to add more knowledge to your trading plan, more information to how you're basing your trading decisions, and in general add more tools to your tool belt, so to speak, with knowing where to look, what to do to find different types of information, how to apply it maybe in different ways. You can start to improve upon your long-term success. And so in that regard, this is the direction we want to head, is to hopefully improve. If someone's winning 45% of the time, hopefully you can bring that up and win 50% of the time. Or if you're already winning 55% of the time, maybe you can improve to 58% of the time, etc. And depending on your trading plan, you don't even need to win a high percentage of the time, depending how you're doing your stop losses and your take profit marks. All different types of winning percentages can be profitable. And so we can go over some of those ideas as well. But if you want to read our full risk disclosure statement, you can find it on AvaTrade's main website, avatrade.com, and read through it. Now, speaking of risk, if you haven't noticed, the second mobile app that's available, and it's been around for a year or so now, the AvaGo mobile app. So the MT4 mobile app isn't the only one available with us now. The AvaGo mobile app is made by AvaTrade, and it has some special features on it that you can't find on any of the other trading systems or trading platforms that we have. So if you're trading MT4 and you're using the MT4 mobile app or you're using the PC version, keep in mind that the AvaGo mobile app has some extra features. Like it will calculate your exposed amount to a certain stop loss level that you program. It'll tell you before you even place the trade, if you put a stop loss, what amount you're risking. It'll calculate it for you. For your take profit as well, what amount your potential profit is at that take profit mark based on your trade size and your account currency. It'll calculate all that for you on the AvaGo app. And then also there's a special feature that really you're not going to see at any other broker. And it's new to AvaTrade as well. That's been developed and we've gotten a lot of good feedback about it. It's called Ava Protect. The Ava Protect feature is a protection against losses for the trades that you open for a flat cost for a specific time period. And so you can find that on the AvaGo app. It's available on all FX pairings, on gold, silver, and eventually some other assets as well. Adele, great. I'm glad to hear that that you like it. Adele's one of my VIP traders, and he's here in the webinars lately. And he's saying that he's using the AvaGo app, and he's been with other brokers, other mobile apps. And he says it's one of the best there, or the best he's used. So I'm happy to hear that. It's really good feedback. If anyone needs help getting the AvaGo app, let me know. I'll show you where to find it on our website in a little bit. But it's a good idea to take a look at the Ava Protect feature for a flat cost for assets. If you think there's high volatility that day, the flat cost might cost you a lot less than where you might have put your stop loss. And then you can stay with it for 1 day, 2 days, whatever the time period it is for the coverage, and be more patient with moves maybe. Just an idea. Now, keep in mind 2 types of fundamental analysis. And the big one for today is the extraordinary economic event. But the 2 types of fundamental news that we get are regular economic events, which there were several of them today, plenty of them, and we'll take a look at that. Regular economic events would be like PMI numbers, factory numbers, production numbers, jobs numbers that are scheduled for a specific day and a specific time for a specific country. Okay, those, while you don't know what the exact numbers will be, you at least know what the topic will be and when it will be and what country will be involved, etc. And then the other type of economic event that is a type of fundamental news is the extraordinary economic event. And I think we all saw an example of that at the end of last week, where the U.S. Sent a missile into Iraq to take out an Iranian general. Whether you think it's right or not is not the point right now, but the point is, boy, no one really predicted that, and it really shook the markets, and that's a very good example of extraordinary economic news. Okay, and there's no way to have predicted the time, where this was going to occur, what assets it would affect, or that it would even occur at all. Okay, and so that's a good example of an extraordinary economic event, as well as U.S.-China trade war news breaking at any time. Brexit news was the big one months ago that had breaking news all the time, not so much anymore. So those are examples of extraordinary economic events, and we'll be looking quite a bit at that today and the effect on the markets. Any questions you have, please. Any input you want to give as we go along, please do so as we go. Don't be afraid to interrupt me. So we can quickly take a look at first. We'll take a look at my demo account and see what some of these movements were. First of all, there were some large climbs here on the 15-minute. We could look at 30-minute candles. It looks the same. Anyone know what drove that rise today on the pound against the USD? Amir, no, not at all. I'm not saying don't trade during extraordinary news. I'm saying be ready for it with your trading plan, and we'll talk about how to do that. Good question. The extraordinary news creates a lot of potential, and we'll look at that today and how you could easily take advantage of it without knowing when it was coming or what it would be, but to be ready for it. So the pound went up because there were some economic announcements today that were good for the pound. We'll take a look at what they were. Very easy to make this move today. And so we'll take a look at that. And what else would allow the pound to climb against the USD? Nervousness about US-Iran potential war, right? It's probably not good for the US dollar or the US economy if the US gets involved with another war that could bog things down for the US. So the pound rose quite easily against the USD today. It also rose quite easily against the yen if we take a look. It did the same thing. So the pound was very bullish today. We'll take a look at the fundamental news why. Then we can come back and talk about strategy of how you might have profited on this. Okay, so we'll do one asset at a time. Let's go ahead. We'll take a look at the fundamental news. And we'll come back here to AvaTrade's website to look at the AvaGo mobile app for a second. But let's first look at what happened with the pound today. And so we'll go here. And we see this news came in today, and there was actually a lot of positive economic news that came out today. We're looking at the European Union had German retail sales better than expected, year over year and month over month. We had Spanish services PMI better than expected. Anything above 50 shows economic expansion. It was expected to be well above 50, and it was even well above that expectation. And so kind of positive news here. We've got positive news services PMI out of Italy. And then going on, more German numbers that came in better than expected. All green, 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 green. We've got the pound composite PMI better than expected. Services PMI better than expected. Looking at this, would it have made sense to pair the pound against the euro? Or would it have made more sense to pair it against the USD? Looking at this fundamental news. I'm asking a question that I think is probably obvious. Yeah, definitely against the USD, based on the fact that the USD had reason to maybe be a little weak with all this tension between the US and Iran, and really the US is still involved with trade decisions with China that aren't done for phase 2. They haven't signed phase 1 yet, although they say that they're going to. So the USD has reason for hesitancy. And the euro has reason to be strong with all these green announcements, and the pound had reason to be strong. So rather than putting two strong horses against each other, had you saw these announcements for the pound, 11:30, or no, I'm sorry, 9:30 in the morning UK time. This is New York time here. Then we look back at the chart. What would have happened had you bought on the pound at 9:30 after these numbers came out? Let's go back to the chart. What time did this climb start? Now this is GMT time, so here's 9:30 right here. Okay, so this climb occurred prior to that announcement, but then continued further up. So even if you got in late at 131.45, it went all the way up to 131.70 or so before it leveled off. Came down and went right back up there again. You'd had a second chance to take profit. So if you weren't already going against the USD prior to those announcements because of the whole Iran-US situation, and you waited until you saw positive news come out for the pound, you still had another, 30 pips rise that you could have taken advantage of even after the announcement came out. So that's something to keep in mind. And let's see, 8:15 GMT time. Let's have a look what announcements maybe occurred at that time. We go back just a little further. No, there was nothing on the pound before that. So maybe there was some anticipation of these numbers prior to them coming out. And sometimes that happens. You don't catch the whole movement. But who here wouldn't be happy with a 30 pip profit? Even if you got in late at 9:30 and profited from here up to this area here where it consolidated. Listen, if you're averaging 20 pips a day each month, that's pretty good. You can make a pretty nice profit with 20 pip average per day. So on one move, even to get in late, not bad. Now, how could you have taken advantage of all of this rise? What technical analysis strategy would have been simple to do? Knowing that there was tension with the US to say, okay, I'm going to take some pairings against the USD. Here's my resistance level, resistance, resistance, resistance. You put what kind of trade right here, just above that resistance. This is a breakthrough candle. Okay, breakthrough candle. Yeah, bouncing off the resistance, bouncing off the resistance. If you anticipate bad news for US, even though you didn't know that the good news was coming for the pound, you think bad news for US, so maybe the pound could climb against the USD. What kind of pending order would you put above this resistance level? Resistance, resistance. Here's the breakthrough candle. Your buy position above the resistance would have kicked in as a buy stop, right? It was a broken resistance right here with a breakthrough candle. And a buy stop would have gotten in right as it broke the resistance. And look at the profit you'd have had then. You're talking not 30 pips profit. You're talking maybe 100 pips profit, right? Hey, Thomas, thank you. Happy New Year to you too. So yeah, easily if you were doing a technical analysis strategy and not paying attention to fundamentals, and in the morning you just did a breakthrough strategy here, boom, 100 pip profit potential there. Or if you were using fundamentals for that reason, which would have made sense, USD had maybe reason to weaken, put your pending order above the resistance, it breaks through, boom, you're in, near 100 pips profit, right? Or if you got in late and only did it with the announcement, 30 pips profit, still okay, right? Either way, it's okay. And so that's one asset, huge movement. We see it reached a wall here. I say a wall, I guess I should say a line of resistance. It acted like a brick wall. It hit, dropped, hit, dropped, hit, dropped, then came back up and dropped again from it, okay? So it looks like this climb ran out of momentum and it's kind of consolidated, right? So I don't know that there's huge potential here for this type of movement again today. But boy, for those of you that caught it, would have been very nice. Now, a couple other assets let's take a look at. And if we look at gold, this is very interesting. Gold had a gap at opening, okay? Gold had a gap at opening. So if you're the type of trader that likes to watch the openings from Friday to Sunday night / Monday morning, you could have cashed in very well. And they're very easy strategies. The fundamental news, we already talked about it. We alluded to it. Let's look at it real quick. The fundamental news, why you might have gone with the gap. If we take a look here, we've got articles about, let's go to the main page. Middle East tensions persist. If you click that and read, you're going to understand what that's about, right? The US-Iran situation the headlines have been on all of the sites. And so let's get to the main page. Oil up slightly after Brent blows past 70 on U.S.-Iran crisis. Okay, you keep seeing U.S.-Iran crisis in most all the headlines. Okay, and so we can go here. Oil price could double to $150 a barrel if U.S. and Iran go to war. Wow, that's a prediction. I'm not here to endorse that for sure will happen. But you see the sentiment here, what was driving oil to rise, and what typically happens when there's tension and fear and oil goes up. What happens to gold? What happens to gold usually as well? Well, it depends. Depends what the fear is about, right? If oil is going up because of good economic news, yeah, a lot of times there's an inverse correlation, right? A lot of times there's an inverse correlation. Thomas, if you don't have my direct email, we need to make sure you get it. If you need to reach me, it's easier to reach me directly. So let me get back to what I was saying. So inverse correlation between gold and oil. Typically, oil rises because of good economic news, right? Good economic news means higher demand for oil then with better running economies. And that means, okay, good economy means people leave gold and buy into other assets. And so gold tends to drop when oil goes up. That's the general idea. But why today did gold shoot up from Friday through today and oil went up? Because the reason for oil price climbing wasn't good economic news. What was the reason for oil price climbing? U.S. Iran. Exactly. So oil price went up because of fear, not because of good economic news. And so when oil price rises because of fear, gold a lot of times then will go along with oil, not inverse relationship. So this a lot of times is where EAs that are programmed to trade on oil based on gold or trade on gold based on oil, they might be programmed as an inverse relationship, and then the EA fails when they go the same direction because there's two different main reasons what drives oil price and what drives the up and down value of oil. It could be fear, or it could be economic reason. In this case, it's been fear. So gold was moving with oil rather than inverse. So I'm glad we talked about that because that can really hang people up, not understanding that usually it's an inverse relationship, but sometimes not. So oil went up because of the threat with U.S. and Iran maybe having war problems. By the way, Iran's oil has been sanctioned for a long time, not really available on all of the world markets. Why would it be such a big deal to oil if let's say U.S. and Iran get into war and Iran's oil supply is cut down? What is it about Iran's strategic location that could disrupt oil from other oil producing nations? Yeah, it's if you've heard of the Straits of Hormuz, the waterway where lots of oil shipments need to go through. It's a place that really could have some trouble if there was a war because Iran is right in that location. Okay, so other oil producing nations need that waterway to be open and ready to use and not bogged down with a war. So that's why there's such fear about a war and why it affected oil price. So that's something to keep in mind, why oil went climbing up like it did and why gold went climbing up as well. All right. So this seems a bit extreme, maybe. Oil price going to 150 a barrel. But listen, the sentiment's there, right? whether you agree with the number or not, the sentiment's there. It's a headline on a major news site. And again, we're seeing the same topic, the same sentiment. Oil price up, could go higher. This is what is being said. Headlines, tension persists. Okay. There were some good numbers from Alphabet, Amazon that help keep U.S. indices up a bit today, though. So those are things to keep in mind. Volatility index, obviously up over 2%, right? We see this S&P 500 VIX index. It's the volatility index. Some people call it the fear index. Of course it's up, right? And dollar index is down. But the indices held on because there were some good numbers that came out today. Investors are investors, and a lot of times aren't so worried about regional wars. Now, if we then take a look back at the charts after looking at the fundamental news, we can start to understand, why did gold gap up? Okay, we all understand. We've talked enough about what happened with the US and Iran. So this gap up was followed by an immediate continued climb. No filling of the gap. Okay, no filling of the gap. So once it gapped up at the open today, if you understood the strength of the news that occurred Friday, which is easy to understand, when two very economically important countries are potentially on the brink of war, that gap was a sign of momentum. An easy strategy here. Thomas, I can't predict whether gold will go above 1,600 or not, but we can talk about momentum. We can talk about the fundamental news. We can look at the support levels, resistance levels, and you can make that decision. Okay, and you can limit your risk, and we'll show you how. Okay, keep in mind, gold, you can use AVA Protect with the AvaGo app with gold. Okay, and I'll show you how that might work. So, all right, so we see here, okay, the gap opened here, right? It gapped up from Friday's close down here to here. So immediately, if you're the type that trades this, you're up either very early or very late, whichever way you're looking at it. And depending on the region you live, when the markets opened and you saw this gap, that's a sign of bullish momentum for gold. And that was to be expected, right? If you followed the news through the weekend, you'd say you knew in your mind it was going to gap up. And with the strength of the news, you might have said, okay, I'll bypass the idea of a fill the gap strategy, of it coming back down before it rises more. And what you could have done was, okay, I'll take a trade size that allows me to put my stop loss below Friday's close, feeling confident that with the type of news that happened from Friday through the weekend, that you don't think gold should refill the whole gap and drop below Friday's close. If that's how you felt, right? Because of the strength of the bullish news, the fundamental news driving gold up, then this was an easy move. And I have a lot of traders in my portfolio that did this, okay? That went with the strength of that news, saw the gap, and went with the gap, okay? Went with it. And so what we saw was a continued rise after the gap from 1559. And let's not count the top of this wick. Let's count where you'd have multiple opportunities to close at profit. This resistance level here, resistance, resistance, resistance. You know, by this time, resistance, resistance, resistance. You get the idea that maybe the momentum was over, right? So we'll not try and be a perfect world and say you'd take the profit up at 1586. Let's say you got in somewhere after the gap, somewhere up here, okay? Not the perfect entry, but you got in, let's say 1563, and it consolidated and moved sideways here, and you got out somewhere around 1578. Okay, that's being conservative. Not the highest point, not the best entry, and not the best exit, but still even getting in late after the gap, up a bit, and not getting out at the perfect spot. I'm saying down here someplace. 1578, getting in at 1563. That's like $15 rise in the price of gold. Okay. I have someone saying they're not hearing anything. Can you type okay if you're still hearing me? All right, thank you. So it's just that person. Let me type a quick note. Okay, so I let Fu know it's just him who can't hear. Hopefully he'll get his audio fixed on his side. Okay, so we get the idea here. You need to make a judgment call sometimes with the strength of the fundamental news. So let's say you weren't lucky enough or smart enough or quick enough, one of those, to get in on gold before the market closed Friday, right? Because boy, as soon as all that news was breaking out the end of last week, I think people were pretty certain gold was going to continue to rise and gap through the weekend. And if you got in before the markets closed on Friday, great. If you didn't, and you're catching all the news over the weekend, you make a judgment call on the strength of the news. And you say, okay, I feel for sure it's going to do this at open. And if it does, that confirms the momentum and I'll go with it because of the strength of the fundamental news, right? And if it isn't that strong, then maybe you play the fill the gap strategy. But that's up to each person, right? And really, you would never start the fill the gap strategy unless it came back below the start price, which it never did. Never came back down to even start. So even if you were going to trade that strategy to fill the gap back down before going up, you would have averted that false move because it never made any move. So there was never a confirmation to start that move. Now, but in any event, I think it was a pretty simple move to go with the gap in this case based on the strength of the news. Now, once it consolidated and went sideways, a lot of times that's a spot where people will take profit. Okay, that's a scalp move. Now, I'm not saying gold can't rise more, that you necessarily had to have closed your trade already, but as a scalping move, the move would have been once it's consolidating. That's a time when many traders will say, okay, the fundamental momentum died. Now I take my profit if I'm a shorter term type move trader. Now, why do you think this movement, when it pulled back down, stopped right here? It returned to the price that it opened today, didn't it? Okay, so that was predictable as well. It corrected back down, but it wasn't just a correction. Remember all those economic numbers we looked at, right? Let me show you again. Remember all of these economic numbers. Economic calendar. Here, green, 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 green. Okay, you get enough positive economic numbers like you see here. It wasn't a bad idea to trade down from this resistance line once it formed. Okay, because what's gold usually do when there's, what was that, a dozen green, meaning better than expected economic numbers that came in? Usually that helps gold drop down. So after a rapid rise, it forms a resistance level. It wasn't a bad move to take a shot at a pullback towards the open price. Okay, and this would have been a logical spot to take profit as it reached this opening price because that becomes a new support level. Okay, so and once that pullback occurred and you saw all those positive economic numbers, you could have sold, and then you take your profit. If you're scalping again, take your profit before that support level, and it stopped right about where you would expect it to. All right, Fu, I don't know. You're the only one with audio problems right now. Maybe check your headset or your speaker or something like that. Okay, so now, was this not an easy prediction to bounce off the support? Why should gold bounce off this support? We all just talked about it, right? There's all kinds of fear on the markets right now because there could be a war between US and Iran. So look at it climb. This is not a bad even market move right now. It's not a bad market move, fundamentally speaking and technical analysis wise. It already established it can climb to 1579 today. it established that, right? That's another, what, $12 up in the price? So it bounced off this support and it broke this little resistance right here. Resistance, resistance, boom, broke right through it. It has the potential to climb. Where might you put your stop loss if you take a buy as a scalp here? Where might you put a stop loss? Just below the opening price, right? Right there. Just below the opening price. So you might only have to risk from here to here with a potential profit to about there, to the next resistance if you're scalping. Now you could pick different spots, obviously. You don't have to pick the spots I'm talking about. You also could wait and see if it comes back down towards this support. What kind of trade, kind of pending order could you put down here if you wanted to get a more perfect entry point for a buy? If you were saying, okay, I'd like to buy, but I want to buy from this support level where it was here, kind of pending order would buy from a lower price. Yeah, it's a buy limit, a buy limit. This is up to each individual trader. If you program a buy limit, it comes down and then rises, great. Great move. If you put a buy limit and this just keeps climbing, okay, you didn't lose anything. You just didn't get in on the action on this movement, right? So there's no reason why you couldn't do both. For example, you could take a market move now, right? For half the trade size that you would prefer, half, right? And then if it comes back down, you have your buy limit to back yourself up with a buy with the other half of the trade size that you were willing to put on for a short-term move. Okay, so that's kind of spreading things out in case, you know, step one, you've got step two in case the market move goes bad. Just some ideas. It's not certainly not the only option of how you could go about things, but that certainly is a strong rise that it's going through right now. The best, someone's asking, what's the best scalping time frame? Listen, it depends on your preferences, but you see I'm looking at 15-minute candles. I like to look at the bigger picture, 1 hour, 4 hour. Also come in and look at the 5-minute, the 15-minute, and then you get in kind of an inside out or outside in perspective. You see the bigger picture, you see the smaller picture, okay? And if everything lines up with what makes sense to you, then you make your move. We've already established the bigger picture was gold came rushing up. The smaller picture is resistance and a pullback right back to the support level from the open. Okay, and already bouncing off. And while we've been talking, I think it's climbed another $1, right? So we could already be up on a market move, even if we had ourselves backed up with a second move down here with a buy limit, for example. Okay, so do you have to take profit everything at the top? Let's say this is the resistance level you prefer. No, there is a resistance level before that, right? Right here. This old support breakthrough, okay? This is a spot that as it comes up, if you had gotten in earlier, this might be a spot where you'd take maybe half closure on your trade if you're in profit. You can do partial closures, that sort of thing if you want, or put a trailing stop on it. So there are multiple ways to go about it. Okay, good. So let's take a look at some other assets, and maybe we'll first look at the economic calendar, see what other announcements occurred today. Mostly euro. We had some USD, mostly euro GBP. We had some Canadian numbers that were mixed, not really big deal here. And we had USD numbers that were positive. Okay, some positive numbers on the US. Someone's asking about the yen. There was no major news about the yen today, but if we look at yesterday, there was manufacturing numbers out of Japan, lower than expected and certainly below 50. So, during a day when gold was strengthening, why was the yen weaker? That could have something to do with it there. Okay. Edison was asking about the yen. So that's something that could have affected the yen there for sure. And so let's go back then to the charts. And let's look at oil. And boy, there goes gold climbing again. All right, so that market move on gold's looking better and better. Before we look at oil, Amir has some questions. Let me read here first. Is there any correlation between the pound and gold? Nothing strong that I've seen. Maybe someone out there has developed some algorithm, some correlation between the two. I haven't seen a strong relationship with it other than with Brexit. Okay, Brexit news was such a big deal about major regions of the world, the European Union, Great Britain, that as Brexit news came in, it obviously was affecting the pound and it was affecting gold because major economic news moves gold and it was obviously moving the pound. So there, you could have found a correlation there quite easily when Brexit news was front and center. There certainly was a lot of correlation there. But in general, is there a strong correlation between the pound and gold beyond the Brexit situation? Not that I've seen strong. Good question, though. Under certain market conditions, aka Brexit, yeah, certainly. Fu, I'm glad you've got your sound running. I'm sorry it took you so long, but we're still going. All right, so what happened with oil at market open? Let's find it. So we're looking, this is market close on the 3rd and market open. My lines are in the way. Market open on the 5th, which was Sunday night / Monday morning. So oil gapped up. Okay, again, same reason gold gapped up, right? And so when you saw oil and gold gapped in the same direction at the same time in a significant amount, then you need to understand fundamentally why it happened, which it was easy to know, and that as some of you acutely pointed out, this goes against the normal relationship of gold and oil. Usually they're inverse, right? Because it's based on economic news. Usually they move inverse. Oil goes up with good economic news, gold goes down, vice versa. When you see them move together, you know it's based on significant fear, not economic news. And so when they both went up together, that clues you in even more to the strength of the economic news, right? So as this gapped up, right, look how much time you had to get in on a buy on gold. It gapped up from 62.75 or so to 63. It gapped up $1 about, okay, a full $1. And so that's a significant gap. And if you had the two assets side by side, split screen, right, like this, let's bring gold over. And if you saw, hey, there's a gap up in gold, and let me go to 30-minute, it'll be easier to see it. Gap up in gold, and at the same time, gap up in oil. Boy, that clues you in. This is a real move. This isn't something that necessarily needs to pull back before it goes up further. And so that could have clued you in again to buy on gold or on oil, even after the gap. And so understanding the fundamental news. And so you could have gotten in on about another $1 rise in oil. It did pull back down, though. It wouldn't have turned out quite as necessarily pretty as the gold move. But if you traded on both, you probably broke even on oil if you tried to be patient and oil came back down on you, but you made a nice profit on gold. So in one case, it went up, came back down. You probably would have got out as it dropped below the gap. Okay. Remember we said on gold, if it drops below the opening gap, then maybe you get out on your buy. Well, what what did oil do? It dropped back below the opening gap. So all of this would have been filling the gap sell strategy. Once it dropped below the gap, that says sell, technical analysis wise. Okay, so things calmed down, right? Gold did not break below because it's more driven by fear than oil is. Oil pulled back down because oil is more driven by economic reality, which is there's an oversupply of oil in the world, right? So this was predictable that it may fill the gap easier than gold. And so that's just understanding the nuances of the different assets, what drives them. Fear drives gold more than it drives oil, and economic reality drives oil as the primary factor. And so let's then take a look closer at what's the move on oil. What do you think you should do? Well, it's filled the gap. It didn't break below. One strategy is trade back up from Friday's close, okay? Unless it breaks below Friday's close. It broke below by a little bit, but came right back up. And so if it breaks below the low point that it already hit, you can get out on your buy. Otherwise, a technical analysis strategy would be go back up with oil. It just established it can reach up here, okay? Maybe the fear will drive it back up again. Okay, Adele, that's what I was just pointing out. Which traditionally is the asset that people buy when there's fear? It's gold, right? So it makes sense. It held its position well. Now it makes also sense that oil could go back up because that fear is tied to a major region in the world for producing oil. So as a secondary effect, oil could bounce back up again. And that's what we're talking about here. It filled the gap and it's holding steady right around where it closed Friday. And really, if you follow this wick down, it closed right on this line, right there. That was the close last Friday. And it hit that area, bounced. Okay, so you could say you take a shot at a buy on oil, and if it breaks below this low point, which is below Friday's close, then maybe you get out. You say, okay, took a limited shot. Fu, you've got some question marks. Hold on one second. Okay, so Fu, the region, the Middle East, the area where if there was a war that broke out between U.S. and Iran, that could be strongly affected, the commodity that ships through there is not natural gas, it's oil, right? So the fact that oil went up and natural gas didn't go flying up with it, it's because it's not economically driven. It's fear driven, and the fear is specific to that region, right? The fear is not specific to regions that specialize in mass producing natural gas so much, okay? Good question. So there's one idea. I'm not saying you should buy on a market move. I'm saying if you did, the fundamentals are with you. There's still fear in the markets. It pulled down, and it looks like it's bouncing off the support, so the technicals are with you as well. You could do limited risk to the underside here with a much larger potential gain if it repeats what it already did once today. Okay, so that's a limited risk, high potential move in terms of high potential, in terms of the amount you're risking compared to the amount you could profit. Now, really how high potential is, it depends on your trade size as well, quite obviously. So that's one potential move. If you're of the other nature and you feel there's lots of reason for oil to drop, and I'm not saying you should feel that way, but if you did, what might be wise is to wait for confirmation of a downtrend by breaking below Friday's close, which would be down here. The same spot where you'd bail out on your buy is a spot where you might confirm in your mind that, ooh, oil's going to pull back down. And if you feel that way because the global economy is not the greatest and that oil is due to pull back down, then that might be a logical entry point with a sell stop pending order waiting on it. Okay? So, and there's no reason why you can't do both if you don't have a strong feeling on it. Yeah, market buy backed up with a sell stop might make sense here. Exactly. And I say this a lot in the webinars. You don't have to be right to win. You don't have to guess the market. You play the market. It's a situation where you're trying to be smart. You're not trying to be right. So you make a market move because the fundamentals are with you, the technicals are with you, limited risk. If it breaks the support, well, now the technicals are with you the other way, so you get in on a sell stop, limited risk back to the upside with your stop loss up here. Large potential this way, large potential this way. You can be wrong on one and right on the other and make a huge profit still. Okay, this is a setup where people who profit long term, we showed at the beginning of the webinar the percent of people who profit long term with us. These are the sorts of ideas they're doing, right? They're not just throwing everything they have on one direction and no matter what, they want to be right. Think of it more as playing chess, making one move, but always being ready with that backup move and the next one after that, thinking 2-3 steps ahead and knowing that I don't have to be nervous about this move because I've got myself covered here and there. Okay. All right, great. Good point. Okay, so what about the indices? I think it's important to look at those because they are major movers as well. Oh, and by the way, before we move on, let's take a look. Before we move on to another asset, let's go. I promised to show you the AvaTrade Go. So trading platforms, you go on our main website without logging into the client area, go to trading platforms, and then AvaTrade Go. And that takes you to the page on our website. If you go here with your mobile device, right? Not on your PC, with your mobile device, go to trading platforms, AvaTrade Go. You can get it in Google Play or the Apple-based mobile devices app store, and you can access finding it that way, or just go to your app store and type in AvaTrade Go, and you'll find it. Okay, you don't have to follow these links, but you can see images of what it looks like. The Ava Protect feature, what you'll see where in the order window when you're picking buy or sell and you're getting ready to place an order, not only will it have take profit, stop loss, okay, these options, or pending orders, that's what this buy only is, pending order options. You'll also see right in the same area a gold symbol and it'll say Ava Protect, and you can choose different options with that feature. That will only show on assets that it's available. Right now, all FX, gold, and silver. Okay, so, and you can learn more about it here. There's actually a video that you can watch showing you all the features of the AvaTrade Go app as well. Okay, I won't take the time to play the video for you now. You certainly can watch it on your own time. So let's go ahead back to the platform and let's see, Adele, you have a comment. Trading is not about being right. It's about, yeah, you're right there. It's a lot of times it's about momentum. It's about momentum. But one thing to keep in mind about momentum, it doesn't have to last long. And what I mean by that is, what if an article came out, if news broke, U.S. and Iran agree to back down and have negotiations, right? If breaking news came out that said that, wouldn't the momentum completely flip from what it was today? In an instant, momentum can change, and many times that new momentum, as you're saying, comes at unpredictable times. So if you think you know what the momentum is and you're just going to go with that, and you feel like you have to be right, and you don't have that chess plan where you have step 1, step 2, step 3 thought out, and you go just with that momentum and that's it, understand that momentum can flip. And so, yes, momentum's important, and going with the momentum many times works. And it's better to know what direction the momentum is, and maybe let yourself go with the wind, because usually momentum lasts a while. But always have within your plan, like the example we showed, the sell stop option here, have within your plan a backup just in case that momentum switches. Just in case, remember, 2 types of fundamental news. Just in case the unpredictable type of fundamental news, the extraordinary fundamental news, just in case that occurs right after you opened your trade, right? You take a market buy here and you say, oh, the momentum's with me, and then the opposite momentum comes because some article comes that you didn't expect, some news breaks, and boom, it goes shooting the wrong way. You got to have yourself protected, right? One way or another. Okay, and I know you understand that, Adele. I'm just making sure for everybody else, when you're talking about momentum, that they understand momentum doesn't always have to last all day like it did today. Okay, let's take a look at some of these indices then. And obviously the dollar was weakening today for some time. The US dollar, I mean. And where did I leave my indices? Let's find them. Here we go. Here we are. Let's look at maybe some indices other than the US. What did we see? Gap down, right? So was it just US indices that were affected by the US-Iran news? No, right? Look at this drop and then recovery, right? Talk about a potential opportunistic entry point. What do you say about that? What do you say about that? Is there still fear in the markets? Let me ask you, is there still fear in the markets? Soren, you typed some question marks, so I'm not sure what, but I don't know what your question is. Is there still fear in the markets? The answer is yes, right? Nothing's been resolved about this whole situation that created the fear. So here was the drop in the FTSE, all the way down. Look, it climbed back up through the day, and what did it reach? The spot that it gapped down to. Look at that. Perfect example of a resistance line being created by the gap. It gapped down, dropped, returned to the gap, resistance, resistance. Soren, yes. The Avago app is designed to make it easier for traders. It's much easier to utilize than the MT4 mobile app. The MT4 mobile app's been around for decades. AvaTrade created our own mobile app, the Avago mobile app, for that exact reason. It's more updated with features, it's easier to use, it's more trader friendly, etc. So certainly I would recommend it for beginners. Absolutely. Part of what I said, it calculates your exposures for you, it calculates your potential profit, all of these things. So it makes things simple. So what's an opportunistic move you might make here if you think there's still fear in the markets? Looking at what the technical entry point is here at this resistance level. Yeah, or maybe not a sell limit. Thomas, you're saying sell limit. It already reached the resistance level, didn't it? Perhaps a market sell off the resistance with a stop loss above the gap from Friday, right? If there's truly fear in the market still, why should it go back above where it closed Friday? Maybe it'll fill the gap, but it shouldn't break above that unless the fear is gone, right? So a market sell with a patient stop loss in case it fills the gap is one option. A second option is you could be patient. Wait to see if it's going to fill the gap and only sell if it comes back up here, okay? I don't like that option, but you might. You might wait for it to close the gap exactly, then sell. Now that's trying to be more perfect, right? If it drops now, then you don't get in. If it fills the gap and then you sell, certainly that's a better entry point for a sell, okay? If you think it'll fill the gap, but you still think it should drop, then to avoid missing in case it drops now, you could just do a market sell and put your stop loss above the gap like I suggested first. The gaps do mean something. And yeah, this chart is showing a number of gaps. That's correct. But this particular gap was followed by, look at the size of the candle after this gap. Look at the size of this candle. I don't see a candle this size after a gap compared to any of the other gaps. It was really huge. So the movement that follows the gap many times can clue you in on the significance of it as well. Very good question. So I tend to wait for confirmation of a downtrend before I sell. So when I'm saying that you could do a market sell, if you wanted to do a market sell now, you could, right? I'm not saying you should. If you zoom in on, say, 5-minute candles, you could say, okay, here's where it gapped down to. Here's the rundown. Here's the return to the resistance, resistance, resistance. Okay, that's what we were looking at, resistance level. You could say, I'll only sell if it starts to downtrend now, right? Which many times is smarter. If you think, it might fill the gap, and it might. So you say, okay, I'll wait until I get a downtrend before I would sell, which would mean you're waiting for it to go to a lower low point and break this support. So you might say, if it breaks the support, then I sell. In which case, what kind of pending order are you placing below this little support level before you'd get in on a sell here? A sell stop, exactly. This is how you avoid getting in too early many times, okay? You put a pending order, but we zoomed in on the smaller candles if you like the entry point, but you just want some confirmation. So you zoom in on the smaller candles to find the confirmation of a reverse in trend. It has not started downtrending yet. It's not a downtrend. So for me, I'm not convinced that it'll come back down yet, right? And so you might also keep an eye on Friday's close. And if it comes back there, then you wait for a downtrend before you get in. So those are options, okay? The reason I keep talking about down is because of the fear that's been on the markets and this downward gap and this downward fall. If you like the idea of buying up on this filling the gap, if you think it's more likely to fill the gap than to drop, certainly buy, right? Just make sure you have a reason for it, right? That's the whole idea. So let's go back to 1-hour candles. Let's take a look at maybe a US index now, which I've got the DAX, or I'm sorry, the Dow Jones 30 here. Okay. So we see a gap at open that went down. And what happened after the gap? It tried to fill the gap a little and down it went further. Okay. And now it's come all the way up. It's filled the gap already. And it's deciding whether it's going to break through the filled gap. Okay. So this one, if you believe it was going to pull back down, again, you might wait on confirmation. It's right now, this is an uptrend. Yeah, Thomas, the bigger the news, the bigger the breakthrough candle typically. Even though this has met the resistance level, the close from Friday, the price, and there's fear on the market still, again, you might wait for confirmation of a downtrend. Is this a downtrend yet? The low points are getting higher still. The high points are getting higher still. So no, it's not a downtrend yet. Could it become one? Absolutely. So the fundamental news tells me the Dow Jones probably could pull back down, right? That's probably telling us all that. It's not really my opinion, it's the fundamental news. There's fear on the markets. Amazon, Alphabet, some of the numbers that came out, good news, helped the recovery process here of the indices. So the question is, was it enough to keep it climbing, or are we going to get a pullback down? I tend to like to go with the bigger fundamental news, the bigger headwinds. I think US-Iran is the bigger news rather than just a couple companies having good numbers. So my eye would be, once I identify a downtrend occurring, lower high points, lower low points on the smaller candles, then I may get in on my market move and then be smart with my exposure on where my stop loss might be, or hedge position if you trade that way. Okay, that's just one idea. You don't have to do that setup. If you like the uptrend you want to buy, you certainly can. I just feel like the fundamental news that we looked at is pointing the other direction. Okay, so you can have an eye for a reversal on the uptrend, and if you like the idea of selling, then technically speaking, the reversal tells you that that might be a good time. And if the fundamental news you feel is in that direction, then it makes even more sense. And more times than not, it's going to improve your win percentage if you're waiting for alignment between the fundamental news and the technical analysis. Okay, I think this is a good place to stop. Any questions before we end things? Okay, everybody, thank you as well for joining. I'm glad you enjoyed the session. And listen, a lot of potential left today for movement. I think there's still a lot of fear on the markets. These indices could make big moves still, as well as gold and oil. Okay. All right. Good luck, everybody. I hope to see you making some nice moves. Till next time, good luck with the trading. Bye for now.